Ladies and gentlemen, please take your seats as we are about to start our final speaker session of the day here in the center stage. What CFDs traders value the most and how they choose their brokers. Let's welcome the moderator, Ioannis Kantartzis from Traders Magazine, who will introduce his panel. Ioannis, stage is yours.
Yeah, good to go. All right. Thank you, everybody, for attending. I'm very glad to manage this panel because I used to be in that industry like back about 17 years ago, and CFDs and the products have evolved since then. So it's quite a pleasure to be making something out of it from the panel today. Our distinguished guests will introduce themselves when answering the first question. And I think I can start with the lady joining us, which is most appropriate. And Janis, with all these offering, same platform, price competition, tight spreads and all that, maybe even education across all brokers, what is it that really distinguishes a CFD broker from another these days? And that's a question for everybody. Yeah, it's better with that.
There's a number of different things. First of all, Janis from Fxview, Managing Director for Financial Intermediation. Let me just say I'm very happy to be here with the gentlemen here. To be honest, I was listening to them earlier on, and I was very excited myself in listening to all the particular products that you do offer. So in saying that, there is a number of distinctions. I mean, I'm sure we'll touch upon those. Some obviously being the platform, the service, the products. But it also comes down to the partners that you do work with in order to offer the services that you do have to your clients. So for me particularly, partnership, whether it be everything from pricing, educational tools, from social trading platform, wherever it may be, these are some of the key points and what adds value for me, the people that understand the stage that our particular brokers are at the particular moment. They have an appreciation for the clients, what their demands and what their needs are, and then how they're going to work with us to further enhance our different offerings. So,
Richard, you want to introduce yourself first, and then, you come from a different type of perspective, although you do serve as a CFD brokers, but I'd like to hear your idea before we do.
So I'm Richard Stoker. I'm here representing the CME Group, Chicago Mercantile Exchange, the 170-year-old derivatives exchange. So yes, we are not a broker. We're not a platform. We don't even do CFDs, so why the hell am I here? So
I was going to ask this.
Where am I? Yeah. So, I mean, we do work very closely with this industry, the CFD industry. Probably a few years ago, we decided that's kind of where is the growth for the organisation as a whole. We realised there was a growing demand for the kind of independent individual trader. So we looked to start to kind of launch some products that were actually kind of targeted towards them. But in terms of what we're doing with the CFD industry, every single CFD broker should be talking to us here. Whether it's a case of deriving products directly from us, okay? We've heard all about kind of tightness and spreads, diversification, education. People should kind of be talking to us about deriving their products directly from us. They should either be looking to hedge directly from us or even kind of looking to kind of set up a futures business. As I say, the last couple of days we've heard all about diversification. It's not just diversification in terms of CFDs, it's diversification across products. And I think we've got some of those products that are really starting to get very interesting and sticky to this kind of retail market.
All right. Rex, you do run a company offering risk analytics to the industry, and that's fantastic. So I'm sure you can tell the difference between one broker and another, as everybody offers pretty much the same, apparently, offering, right? So if you can introduce yourself and just let me know why, as a retail trader myself, we choose X broker over the Y broker.
Sure. So my name is Kumaran. I I'm Chief Growth Officer for a fintech called Illio. Prior to that, sell side, Bloomberg Refinitiv. I guess choosing between CFD brokers depends on the branding that the CFD broker actually wants to be. There are different types of CFD traders. You have hedge fund CFD traders, you have active traders, you have active investors, and you have people who have more money than sense and probably lose it about 6 months later. Now, each platform is probably aspiring to different types of trader. So the reality is that depending on who you are, you're going to choose a different type of broker depending on how they're actually reaching out to you. So for example, if you're an institutional trader, you're going to be looking at a platform which is probably either your agency broker is using more often than not, or if they're offering particular prime services, or if they're offering particular sort of type of like repo rates, which are cheap, or they offer some kind of like decent liquidity or execution that you can actually manage your size or manage your order over time. You're not looking at those type of brokers who are sort of marketing, say, IB affiliate schemes or this, that, the other, which are generally like targeting a different type of trader. So really the choice is what type of broker you would choose depends on who you are, and therefore depends on what that CFD broker is actually then targeting, because each one is actually different in terms of who they actually market to themselves. So it depends on what you're looking for as an individual.
Okay. And David, you're part of a project which is very ambitious, like TradingView, fantastic platform. So is it really the platform that makes the difference? Or we know it's not really pricing and spreads and things like that. But on what basis would someone choose A over B?
Hi, David Belle here from TradingView. I think you've kind of the previous answers have all touched on things that I think are all right. But in terms of what retail traders are looking for these days, and I guess it's probably right to talk more about retail traders here, since pretty much all the brokers here are retail focused, right? Is that they've got a lot savvier over the last 2 years. That doesn't mean they're going to make any more money or lose any more money. It's probably going to stay around 80-20. But the thing is that they've got more savvy, and what they're looking for now is totally different to what they were looking for, say, pre-2020. They've spent the last 2 years at home looking at all the stuff that's going on in markets. And so now they're looking from their broker for additional content, things that are actually going to try and, not necessarily give them an edge, but make them think that they can gain an edge, whether that's platform focused, whether that's content focused, education focused. Even if you go down into providing different products, Richard was mentioning futures. There's probably a lot more traders now that are looking at futures over CFDs, potentially including, the reasoning behind leverage, for example. So I think bearing in mind that the retail trader, even at the lower ends, has changed over the last 2 years is quite an important thing to note. And then, as Rex said, the marketing side of things, how do you then, attract those specific traders and segment them? I think these are the really important things to note. And, with TradingView, for example, you're getting one platform with everything built in at once. You're getting news, all the data you can wish for, and also the social side where people can communicate. So I think, it's totally down to recognizing that retail traders have 100% got more savvy over the last 2 years.
So it's funny that you mentioned that, because we've gone through an extreme fear situation during COVID, and then an extreme exuberant market for about a year, and then down again and up again. So volatility is abundant, but you mentioned traders have been savvier, right? And I was thinking, this nasty rule of 90-90-90 that exists in this CFD world because of leverage and because people don't know how to handle it. It goes like 90% of people who start with this lose 90% of their money in just 90 days. And that's just because they don't have the capacity of risk management themselves or being prudent with opening positions and that. So maybe they could choose a broker who actually helps them not to destroy themselves and make money in, short term. Well, short term is not like 2 days, more like, a few months. So do you think they would choose on the basis of that? And I think Is a question for everybody.
Well, I think it depends on your business model, right? If you're just doing STP, no internalization, B-book, etc., then probably longevity of client potentially is more important because they're going to put more flow through before they blow up. If you are more of a B-book focused broker, but you're able to nurture that relationship, maybe get redeposits, and that's a different story. But I think, yeah, even then clients are looking at how their broker is processing orders these days, whereas previously they wouldn't. They would just sign up and they would just think that their orders hit in the market continuously when, that's not always true. So I think I've said it a couple of times now, returning back to the fact that retail traders these days are far more savvy without necessarily making more money themselves is an important fact to note.
I think David's he's absolutely right there, and that's what we're seeing. I think there's been a huge maturing of the market over the last couple of years, and there's always going to be a place for CFDs. And we're not trying to disintermediate the brokers whatsoever. We work very closely with brokers, but for a certain type of professional retail trader, they want to look to anonymous kind of counterparties. They want to look to trade on a kind of central limit order book. They want to be trading against the asset managers, the hedge funds, the kind of institutional flow. They don't necessarily want to be trading against the house. And I think there's a growing realization that if you're kind of sitting there trading behind a screen all day long as a kind of professional retail trader, then there is kind of other products that you might want to get into. And I think that's the conversations that we've been having with a lot of kind of CFD brokers over the last couple of years. And that's why we've seen some of our kind of products explode.
And Rex, would you think that this is the cornerstone of an offering, distinguishing one broker with another? Because obviously it's one thing to acquire the client and another thing to, have a retention that really makes sense. So at the beginning, everybody wanted more and more clients, and then they had inventory to burn. And then now it's all about getting more quality clients, hopefully bigger portfolios, and then you have to help them maintain their wealth and actually grow it. So you operate in that space. I'm just wondering, is this the most important thing maybe they're looking now?
So, you touched on it slightly before about leverage. Leverage can take a bad situation into a crisis. And the truth is that wealth managers, portfolio managers, and fund managers, the way they manage investment is they don't look at an individual trade first and decide that in isolation, and then they put that trade on. They look at their portfolio first, figure out what the risk parameters are, how things are going to be moving if I add this particular trade, and then decide whether that's going to be an addition to their particular fund or portfolio. So that's how professional money management works. Now, if you look at most of the trading platforms, and one of the reasons why I moved to Illio, and I came from an industry which was very much geared towards providing solutions for people to get into trades, is that there are so many broker solutions out there that put people into trades, whether it's sentiment, whether it's screening tools or whatever it is, right? News flow, whatever it is, right? All of these things get an individual person to look at an individual investment and make that trade in isolation. Whether they choose to do it on leverage or not is then another question. But professional money managers don't look at it that way. They look at it in terms of, what is my overall portfolio itself? How do I manage this trade for the entire life cycle? So in many ways, I think that a lot of the trading platforms at the moment are geared towards the very small part of someone's journey in terms of investing, but they don't actually take into consideration how professionals look at it, which is the longevity of the actual trade in terms of asset class diversification, sector diversification, risk diversification, volatility diversification, all these different things. It's a makeup of your investment over a long period of time. When we were doing solutions at both Bloomberg and Refinitiv to a lot of the online brokers, and even like professional wealth managers as well, they used to say exactly the same thing to us. It's like, so you've helped us get our people into trading, but where is that solution going forward? And everyone actually wanted portfolio analytics as an API. They wanted to use Bloomberg's portfolio management system or Refinitiv management system as an API to put into their platform, because they knew that people actually managing the risk itself, that was going to be the hardest part. And if they could capture that, they would actually have a longer term relationship with the client. Neither of those two institutions did it. That's why I'm here where I am. But yeah, that's what I think.
Good. And Janis, if you wanted to add on that, and of course also the aspect of regulation. So I guess brokers would actually choose based on the regulatory framework of a company, right?
Lovely. If I can sort of, I'll end up with
course.
the regulation, but also sort of add on the various, looking at the traders and also looking at from the broker side in terms of what's, if I can say, what has changed in terms of what we've been looking for. A lot of the products and the particular features is one thing, being able to analyze the particular traders and how they're performing, but also. Traders these days want sort of an enhanced sort of trader and user experience. So this is one aspect of it. And then they're looking at being educated more. So they want to be able to, as David has mentioned, they want to feel that and that they are making decisions on their own. They want to be able to have access to knowledge, access to education and educational tools. They want to have products that will offer them the ability to make informed decisions, based on those things. And then from linking that to the regulatory, I mean, as a broker, we're under pressure to constantly adapt and to all the different regulatory requirements, reporting requirements. So it's twofold there. One, we want to be able to commit and provide all of those, or all of our commitments to a particular traders. However, on a regulatory perspective as well, we want to be able to, continuously enhance, make it more efficient, both from an operational side, from whether it may be a verification process, onboarding process, risk management tools. So there's a whole gamut of products and services, both internally, that's important, meeting, as I said, the regulatory requirements, reporting requirements, and our obligations to our clients as well and our particular traders.
Thank you, Janis. We've all been talking about education here, and we've been talking about the platforms. But I think the question here is like, we have had enough education the past 10 years, either outsourced or not. Mm-hmm. And I think people in this room and outside are looking for recommendation, not just education. They're looking for trading ideas. It's all right that you teach me what a MACD does or how a 50 MA crosses from below the 200 MA, but that's useless if I cannot put it into practice. So within that regulatory framework and all these, tight regulation that's going on around and all these, risk warnings that CFD brings around with the use, how do brokers can actually help the end trader, make something out of it? Not just simple raw theoretical information, but rather trading recommendations, if we can call it as such. David?
Well, I think, firstly, retail traders don't understand the process of actually coming up with a trade idea. So they might look at a chart and think that there's like a 50 MA cross or something like that. That's not a process. Like, there's no further trade management or sort of trade life cycle management there. There's no real specific risk management apart from shoving a stop loss on and then a take profit. And by the way, I think take profit is one of the worst things that traders could use, because they're just capping their upside potential. Great for brokers, of course. But I think, there's education on things like technical analysis, but there's never any sort of holistic education on a process-driven way of thinking about an actual trade that can actually get ingrained into their head. If you're at a prop shop, you're learning from other people who have developed a process over many, many years. That's probably why they've been at a prop shop for so long and they're so successful. But retail traders are largely out on their own. They don't understand necessarily the complexities of the market. And when you don't understand the complexities of the market, you're always going to fall back to your own biases and what you kind of think you know, because it's your safe zone, when really they're still losing money that way. And I think if a broker is able to, provide them education that, really focuses on developing a process, you'll probably generate more trust with the broker, longer lifetime value of the client, and hopefully more revenue at the end of the day.
Richard, on this thing, I mean, you know, CME Group has done a lot on the education, obviously a slightly different product, but definitely not cannibalizing the rest of the business in CFD. And you've spent, you know, obscene amount of money, I think, judging from your websites and knowing, on educated people, like further away from technical analysis, psychology and all that. So do you think they can actually assess the information you give? Can they understand it? And then can they put it into practice so they become, you know, longer?
So I've got to be a little bit careful here because we don't deal directly with retail. We deal with the retail brokers. We don't have a license to deal directly with retail. We do have some phenomenal kind of education on our website though. And we do a lot of work kind of working with the retail brokers to educate them on our products. I think I'm right in saying that CME Group is probably the only kind of exchange in the world that has every single asset class under one roof, all the financials, all the commodities. So we work directly with the brokers, educating their sales teams and kind of educating the opportunities. That's what we are. We basically match buyer to seller, we match the seller to buyer, we charge a transactional fee. But no, in terms of education, I think there's been a huge kind of, I say, the kind of industry. I've only been in this kind of, I've been trading for 22 years myself, both as a kind of pit trader and as a prop trader before joining CME in 2010. But in the 3 years I've been doing the kind of retail space, this has changed phenomenally. The days of basically just kind of launching a couple of products, putting a spread around it, marketing the hell out of it and trying to get the customers in have changed. There's a realization once you've spent all that money marketing, getting those customers through the door, you need to keep them. Those customers need to become sticky. You need to give them every chance of success. And the ones that can make it through the first 12 months are probably going to be there for kind of a long time. So no, we work very closely with the brokers, but yeah, I mean, education for sure. It's kind of, it's amazing how much more money you make if you actually know what you're trading. And I wouldn't obviously, I certainly wouldn't encourage anyone to kind of get involved in any product they kind of have no understanding in.
So I mean, about education, so it depends what you're actually educating them about. So if you go to Robinhood right now, they've got a great section called Learn. You've got Investopedia as well. They'll tell you what a stock is. They'll tell you what a bond is, or a future, etc. That's not trading. You want to know trading, go read Market Wizards. Study that book, learn about stop losses, learn about riding your winners, learn about risk management. That book and the subsequent iterations of that book actually will teach you the actual discipline behind trading, because trading itself is a long-term gain. It's a very disciplined game itself. One of the greatest, the medallion guy, right? His fund has been, for the last 30 years, is average between like 25 to 30% return every single year, right? This trader, probably his win-loss ratio is around 55 to 60%, but he's disciplined enough to know that he makes a certain amount of losses, which he's happy to accept, and he lets his winners ride out so it can actually pay for his losers. Because he accepts that if he's going to make a loss, and George Soros is the same as well, he knows that if whatever his view is, if the market turns round and is contrary to his view, rather than holding on to that loss itself, he'll just take it. And then he'll wait for the next opportunity to arise. And he'll hope it's a winning trade. But if it's not a winning trade, he'll take a loss again. And that is a form of a disciplined trader. I personally think the education of a lot of these broker sites should actually put someone through almost a learning period of actually reading Wizards, right? I mean, that's what I grew up on, like Liar's Poker, Market Wizards, all these different things, all these different books. And that sort of trading discipline becomes ingrained in your mentality so that you understand that concept of like losses, riding out winners, how to position size, using leverage in the right way. There's a great article in The Guardian about this YOLO trader who made around 2 million from around 100 grand, but then lost it all. And then because of the way the taxes were working in the United States, he ended up owing the IRS about 100 grand. And the reason why was because he made a lot of money in the beginning because it was a bull market, right? But as the market started collapsing, he then thought to himself, I haven't made 1 million. I've lost 1 million because I made 2 million before. So now I'm going to chase the market, right? And that's a classic story. If you read like Market Wizards, I think it's like chapter 15 or 16. They talk about this, but it's about that concept of not getting so wedded into losing positions, not holding on to the losses themselves, just accepting it, moving on, carrying on, doing it increments. It's inches by inches. That's how traders actually make money, not by trying to go for a YOLO type activity.
Janis, your take on that? So how people digest information and education in that case?
So to be
Because it's very abundant, right? That's what I'm getting at. But the problem is like interpreting. And at the end of the day, I want to make money with your help, and I'm going to be your client forever. So I need you to help me with that, because I find pricing everywhere the same, platforms everywhere the same, more or less. So I have to find someone to help me make money.
at the end of the day, I mean, look, the focus here is our clients at the end of the day. So while you've been speaking and talking about initially CFD brokers, it's just a way for them in to go in. But this is why even CFD retail brokers, they're expanding into offering different products, different asset classes, being a mature space and not just being another CFD broker, where this is unfortunately the common space is like, let's bring them in, let's just make money. And then at the end of the day, indeed, this is not the long-term goal anymore. I mean, definitely from my end. And this is why I do focus on our clients as well. I mean, every decision that we need to make, whether it is bringing a new particular product, whether it is expanding in a new regulatory space or obtaining another license, at the core of that, it's about our clients and whether it's adding education to them, so they're not just willy-nilly, making a trade, up or down, or following, following what everybody else is type of doing or what they believe they should be doing. So, I've been listening to all of you, and that's why I really do appreciate all the products that you are bringing in, because it's about for yourselves as well in terms of what you do offer the brokers. It's about, yes, there is that commercial side of everything. Of course, there's the money component, but at the end of the day, anyway, at the core, particularly from my end, is what are we offering to our clients in order to engage with them and to give them, yes, what they believe they need or they think they need, but at the end of the day, giving them the option and the best options to make the best decisions for themselves. At the end of the day, I mean, it is their own, their money, their investments, big or small. So we want to give them that opportunity to maximize and have an understanding of what it is they're doing with their trades and the direction and making it their own rather than just me.
But I think slippage is key, right?
Yeah.
I mean, slippage when you're getting out of a trade is very important. When you decide you want to get out, are you going to lose one tick getting out, or are you going to lose 5 ticks? And that's the big difference. I mean, we saw it kind of like the day after the mini budget. The lows across different brokers varied massively. Our low was 103.94. I think next morning, some of the brokers, the kind of like tier 1 brokers, was like in the 102s. I bet you there's some kind of brokers here that are kind of stopping out the traders at parity. So they're kind of coming back on, logging onto their platforms and thinking, okay, where is the market? So I think having deep liquid markets, I think, gives the traders the best chance of success. So it's very, I think, important where you get your kind of data from, where you're sourcing your liquidity from.
Richard, now that you mentioned that you come from you're known as a data vendor. You're a vendor for the CFD space, and then quite a few big names mainly have adopted already futures offering that you have. And I'd like your idea on how these seemingly different products can coexist. Is it a question either or is it like, they don't clash and they can perfectly be a fit for different types of clients?
Yeah, so that's interesting. So people, and I think there's probably still some people here, they see CME as a data vendor, okay? But we are so much more than that now. Yes, you can derive your data from us, but I mean, a lot of people, as I say, as the market matures, are looking to offer their clients more. offer their clients some access that some of kind of the institutional firms would have. So they kind of get, say, the best chance of success, the best chance of the tightest markets. Now, we're not trying, as I say, disintermediate any of the retail brokers. It's a little bit of a different mentality. At the moment, obviously, a lot of these firms are making money, creating a spread around our derived prices, and that's obviously how they make their profits. If they look to launch futures, it's a kind of transactional model. But I mean, what we've seen is the firms that we've worked with, they have looked to offer their clients something different and launch a futures business. Their volumes have exploded. And speaking to them, it hasn't detracted from the CFD side. There's always going to be a time or kind of a certain trader that wants to trade a spread bet on the train on the way in. The CFD, while it's kind of like whatever he's doing kind of during the day, but if someone's sitting behind a screen, scalping the markets, hours on end, they probably want to get access to the tightest possible spread. And that's where our futures came in. I mean, we launched our E-mini micros 3-4 years ago. So obviously this is a tenth of the size of our kind of E-mini S&P. We didn't know how this was going to go. It was the most popular product launch in any exchange globally in history. We had a sweepstake at work to see what the day one volumes were going to be. Within 3 days, it was trading 500,000 contracts a day. And we've gone from strength to strength. I mean, there are some kind of, without naming names, I think you're going to start seeing a lot more kind of tier one brokers offer futures in the coming 12 months because they want to kind of stand up from the crowd, diversify the product offering, and give some of their kind of retail traders something a little bit different.
But surely doesn't that take us back to where we all started? Because CFDs were introduced to help retail traders trade with less money, no expiration seemingly, something that tracks the underlying, anyway, the best efforts of everybody. So now the proposition is like, hello, you've got futures again. You remember something standardized with standard, multipliers? So it's coming back again in fashion, or you can trade it along your CFD product. Is that what, they're aiming at? No,
I mean, we're just looking to... I mean, we've always had a big retail market in the US, obviously, because everyone trades on their 401ks. Kind of, there's no kind of CFDs. We know there's a kind of a big business for that, and it's the kind of the dentist that trades futures in between doing fillings, reading the Wall Street Journal. I mean, that's kind of like the typical retail trader in the US. Kind of had a big retail market in Asia since the kind of Shenzhen and Shanghai indexes collapsed back in 2016, 2017. But say, the brokers that we're speaking to over here, they spend so much money in kind of marketing, advertising to try and get these kind of cost per acquisition traders in there. Once they kind of spend all that time educating them, kind of getting up their accounts up, getting them kind of sticky, why let them walk away to somewhere else that's going to be offering kind of these kind of like, as I say, standardized products. But it's not just about standardized products. It's about having the tightest, deepest liquid markets, and that's where CME comes in. I mean, that's our remit. We offer deep liquid markets and charge a transactional fee for doing it. That's it.
Rex, I was meant to ask you, based on that, do you think there is a different CFD persona that companies should focus on to maximize potential growth, or is it just like the same product for everybody?
Do I think that CFD brokers could offer more?
No, it's like whether there is a specific persona, like trader profile, where CFDs are being offered, or is it like a segregated market where you can, offer different products within that CFD space? So you got institutional, you got the active trader, you got the B2B business.
I mean, like, obviously diversity is always good. Funnily enough, actually, I think one of the explosions of that micro contract you were talking about, I actually think it actually touches on to what David's company does as well, which is the technical analysis. Because if you think about a lot of traders as well, sometimes, especially when you're doing like things like scalping, or you're looking at day trading, you're looking at very short-term trading, you are looking at technical analysis, you are looking at chart analysis a lot, right? And there's a lot of people who are pushing out their views on technical analysis, right? And whether you do your own technical analysis or not, usually there's a confirmation bias there as well. So you tend to look at the material out there, what other people are publishing. And a lot of people do actually publish stuff on futures, right? So that's an example of like why contracts have sort of exploded in certain areas. In terms of diversification, though, in terms of what products people can actually offer, yes, I do. I think the more, you take interactive brokers, for example, right? I'm not going to say anything about their interface, but it does offer a lot of instruments for people to trade, right? They can trade, quite heavy option strategies. They can trade bonds. They can trade a whole variety of different instruments. And it's that ability for a trader, if they're going into it, to start getting exposure to different kind of markets, to actually take advantage of different things that they're seeing out there, and to sort of maybe allocate their portfolio in terms of like different types of trades, the different types of investments. If they can do that with one platform, that makes more sense, right? So I think there is that element that if you offer more, then you don't necessarily need to go and target a specific type of CFD trader. You can by yourself, just by offering more products, attract them. To be honest, it's not about the products you're offering or the features, it's about the brand that you actually are. The truth is, right? It's that it's the brand perception of you as a company that the person buys into, rather than necessarily the features that you're providing. So you talked about slippage earlier on, right? I remember with a broker, this was during the Euro-Swiss trade when the 120 cap floor went. For 2 hours, I couldn't get onto the platform. Right? And even when I phoned them, I couldn't even find out where my trade was. For about 5 minutes, actually, I didn't know which side of the trade I was on. I forgot. So I wasn't sure whether I was down like 200 or up 200. But it's that brand perception. That changed my perception of that company at that moment in time. And I switched after that. So I think there's a lot more than just features or products and necessarily finding a trader. I think there's a lot to do with about what that brand is representing. As a whole, and that's what resonates more with the customer.
And that debacle actually brings me nicely to you, over Davey, for that Better Code September issue, right? So we had an issue, and then obviously I need to understand how brokers can diversify the setup risks of something like that happening again.
Yeah, I think that was quite an impactful piece of news for retail brokers to face. I guess in certain markets, most of their clients are trading off of mobile phone, right? And if they can't download the app or access the app, then that's going to be quite a big impact. I think absolutely, diversifying and, risk management in terms of client access and ways clients can trade is definitely important. So having, multi-platform access is of vital importance. And that's kind of what TradingView offers alongside all of the marketing opportunities as well. We're the #1 website in the world for trading and investing for the retail space. And we're seeing more and more brokers and, clients of brokers from people that I've spoken with recently, asking them, like, when are you getting TradingView? Why are you not on TradingView, for example? So it seems to be that TradingView is a #1 platform both for the broker in terms of client acquisition, but also for clients themselves to be able to trade on and to access all the other features as well. So I think, diversifying away, and naturally I'm going to be biased and say TradingView is the best way to diversify, because otherwise it wouldn't make sense me being here, right? But diversifying away and having multi-platforms is absolutely essential. You can't just rely on one these days.
Cool. Janis, I wanted to ask, what other features or offerings do you think are really important to traders? I mean, we haven't touched upon social trading, which I think is something you're fond of.
Okay, thanks for that. To be honest, I touched upon that again. I mean, the user experience, the ability, education, these type of features and products. I kind of touched upon that. But if I may, just to kind of tag along some of the answers, because I found myself nodding my head as each of you kind of spoke along the way. For example, Rex talking about the brand. This is what sort of the initially traders look for. So it's if I can sort of follow on from that. So this is why there's security. I mean, our clients come and they want to know the integrity, the security, tying back again to the regulatory, components. Where are you operating? How are you operating? So, this is definitely important with that respect. Then follows on again the different products, diversifying the product offerings, being able to then offer our traders again different products in which they can I like to always say, make informed decisions about the trading decisions that they are making. So this is why these particular features become very, very important to our clients. Indeed, there's one thing to get them on board, but then it's about giving them diversification in products. There's many different, products, and I've mentioned some of them.
Okay. Well, we only have 1 minute to go, so if you'd like to add a closing remark, then something hopeful for the next generation of traders, Richard.
Well, the only thing that we actually haven't mentioned is options. So options is pretty much, if that was an asset class, a standalone asset class, that would be our biggest growing asset class over the last 3 years running. Not all kind of proprietary trading firms trade options yet, but it is starting to become very popular, and obviously options on the micros we start to launch, and I think if that's one thing which is going to basically kind of help the education, create kind of stickiness, kind of be a little bit less kind of risky than the kind of like outright futures or CFDs or whatever it is. Kind of options would be a kind of a focus, I'd think, for a lot of people going forward.
Rex, your closing remark, please.
I have none.
That's good. That was quick.
That is a remark.
That's a remark.
That's a remark in itself.
I think, just don't patronize retail traders. Just give them the tools to succeed. If there's any kind of surveys that can be done on what retail traders want, try and just pick the top 2 or 3 and give it to them, and let them get on with it. They're still going to lose money, so it kind of is what it is.
That's great.
I was hoping we were going to finish on a high, but it's gone downhill very quickly.
Yeah, well, thank you very much. Thank you very much for attending. And next year we'll talk about options a little bit more, as you say, Richard. Thank you.
Look forward.
Thank you.